was Friday's weak jobs report that had the herd stampeding out of and into specific investments. Let's bring in ETFtrends.com CEO and all-around ETF guru Tom Lydon. Look, what's the herd doing? What did they do in the wake of that number? And should people right now be following what the herd is doing, Tom?
You're right, Liz. The market climbs a wall of worry, and just in the last week, over $4.5 billion have come out of the largest ETF, SPY, the S&P 500 ETF, and almost $1 billion out of one of the largest high-yield ETFs. So that tells you that people aren't really comfortable with all this economic news that's coming back, but other sectors of the market are participating to the upside.
Okay.
We mentioned gold earlier.
Yeah,
that's a great example. Also real estate. The Vanguard REIT ETF is actually doing much better too. Why? Fed looks like it's going to continue to be slow at pulling the trigger on rising interest rates. That's good for REITs. One sector of the market that's been terrible this year has been healthcare, and now all of a sudden it's looked to be kind of a value play. So the select sector SPDR healthcare ETF has actually been doing well. And then surprisingly, emerging market bonds, value there as well, and also with the iShares JP Morgan emerging market bond ETF, 5% yield, pretty good, but it's also hedged to the dollar.
But the volume, Tom, and as we look and we see what happened today, you have Goldman Sachs coming out with a report yesterday saying that we could see a retracement of about 20%. To me, that's a fancy way of saying it would be a major sell-off in the S&P 500 because the fear just isn't there. We have volatility hovering just around 14, and that isn't showing any kind of fear. In fact, it's showing complacency. So should people be following the inflows or the outflows?
Well, I think you have to pay really hard attention to the next 30 days. A month from now, we're going to be hearing about earnings for the second quarter. I think it's going to be very telling. If we continue to see slow, tepid growth, we're going to see more money going out of mutual funds and out of ETFs. But with money that's raised from this cash, there are going to be other opportunities. Commodities, gold, for example, the biggest inflows that we've seen since 2009. They've had a pretty big bear market there. Might be some cool opportunities.
Yeah, and let's not forget Britain's possible exit, or at least referendum vote, coming up on the 23rd of this month from the European Union.